Hi friends. Uh, Carbon accounting and sustainability reporting. These two terms we need to distinguish if you want to understand carbon accounting properly. Uh, Reporting is altogether a different area. For example, GRI or Global Reporting Initiative, which is followed worldwide, is a framework for one such sustainable reporting wherein the company's impact on the environment, on the economy, on the people is reported. Whereas accounting is basically a comprehensive standard, and the standard would basically focus on calculations or calculations of the carbon footprint. Now, though there are so many terms and dozens of acronyms and so many frameworks in carbon accounting, we need to understand that these standards and these reporting frameworks aren't competitors. They are designed to work together in layers. If you understand their role in each and in-depth treatment of each, we might be able to uh, work on the carbon accounting properly in the companies. So, as this slide mentions, these carbon accounting standards, they are designed to work together in layers. So, which layers are we talking about? So, as I said that basically uh, one is about calculations, whereas other is about communication. Uh, GRI, Global Reporting Initiative, is not about calculations. It is a reporting initiative. Whereas GHG protocol, which is a greenhouse gas protocol, is a comprehensive global framework and a state of standards for accounting as well as reporting the greenhouse gases emissions from the companies or from the value chains as well as from the projects. Right? They are designed, all these things are designed to work together as complementary tools in your sustainability toolkit. So we'll come across all these acronyms, and the focus of this lecture is to give you an overview of this. So let us start with the GHG protocol. G stands for greenhouse, GH stands for greenhouse rather, and the second G is of gas. So greenhouse gas protocol is basically a protocol which is developed by what is known as the World Resources Institute, WRI, and this is most widely used for carbon accounting standards globally. So it would cover all the three types of emissions: scope 1, scope 3, and scope 3, scope 1, scope 2, and scope 3 emissions. It is basically about de facto global standard accepted by GRI as well as other agencies like CDP and CBTI, which we'll talk later. And this is also aligned with ISO, that is its key strength. And it also helps us strongly put in the scope 3 emissions. So it's best for the GHG is best for the corporates and manufacturing companies or hospitals and hotels. They map well with the ESG reports, and they focus basically on the technical how to for measuring emissions as well as defining scopes and ensuring accuracy, completeness, and transparency. However, it is the limitation that it is simply guidance heavy. Means it's not legally binding, and one has to have a professional judgment which might be applied, and which might obviously be variable if poorly applied. The second uh, framework is certification of ISO. So ISO certification is basically, and we'll be more specific, that is ISO 14064. It is audit ready certification, and it talks about the frameworks more specifically and legally. So, for example, the framework 1 is about organizational GHG inventory standards for comprehensive emission accounting at the entity level. Whereas the level 2, ISO 140642, it talks about the project level reductions framework for quantifying the emission reductions from the specific initiatives which one takes. Whereas the ISO 140643, it is about verification and validation, and that would ensure that there is a credibility to it. So obviously the strength of ISO 14064 is it is audit ready and certifiable. It is strong for the third party assurance, and it is preferred by regulators and auditors. The applications remain the same, like hospitals, airports, and utilities, as well as in some government linked entities. GRI standards, if we talk about, okay, so as I said, it is about the Global Reporting Initiative, and they are most widely used for ESG reporting globally. And unlike the calculation protocols, this is more focused on reporting, that is, disclosure of emissions and disclosure of the sustainability performance. So it differentiates, okay, from the accounting protocols in the sense that it is the disclosure or reporting protocol. So the core rule is the standardized disclosures of emission data. It requires all the three scopes: scope 1, scope 2, and scope 3 transparency. It is sector neutral, stakeholder focused, and that is its strength. And for ESG framework, it is widely used. The important note is that, and this we will report again, that GRI does not define detailed calculation rules. It has to be paired with, that is, it has to be complemented with either the GHG protocol or the ISO 14064 protocol for quantifying the emissions. It's widely used, GRI standards are widely used for reporting and writing sustainability reports for the public sector and the industries like hospitals, hotels and manufacturing, as well as for the university campuses and institutions. We'll continue with this discussion in the next class.